What's up, everybody? Oh, Streamception. I had to change my backgrounds now. Let's find this. Which one was it? 3? No. 4? No. No. Last time's a charm. Hey-o, there we go. What's up? Forgot about this screen. What up? Good morning from Springfield. Good morning from Houston. Where's everybody from? Tell me a little bit about yourselves.
Talk to me honestly.
I'm about to take a little road trip today. I'm going to be gone for about 2 weeks. I'm going on a bunch of trips this summer. Escaping the Houston heat. How we do it. Ooh, let me start. Just one little tweets here and everything. Market's looking really good. Touching upper DD band already to start out the morning. Isn't that crazy, right? All right, make sure everybody, you're in the extended trial. Make sure, or even if you've upgraded the Pro Plus, remember, Pro Plus is going to be able to access futures and futures data and futures trading. That launches very soon. I've already been playing with it. We had a meeting yesterday to go over it. It was insanely cool to finally see it. Goodness gracious. All right, hold on. All right, you guys. Sorry about that. Welcome back, Matt. All my displays are all funky again. Got myself a new 4K drawing tablet. This thing is monster. It's dope. Now you can actually see my shitty handwriting be less shittier. I guess I can actually draw with my pen again. My other one broke. Plus, it was only 1080p. It was slightly smaller. It's older. I had it for like 5 years maybe. And the cat knocked it off its little holding stand, and then it fell and the button broke. And I could have get it repaired. I'm like, you know what? I'm tired of all that. I said, there's new technologies out. There's Thunderbolt 4.0. Let me get a USB-C. Not have to worry about my displays powering the thing. I can do it from onboard graphics. Yada, yada, yada. Make it easy. Went upgraded it. That's nice. But then now all my numbers on my displays all flipped around. So I got to fix that. Now we're good. All right. DD bands. Outside DD band. Irrational. Already outside the door. This supporting my SPY 500 thesis. Remember, last October 17th, we called it bottom. I tweeted about it, pointed at the fence, and everybody thought we're in a bear market. And look at my screen really quick. The moment I made that glorious tweet was exactly this green candle here. This day right here. This day right here. I said, this is the bottom. I nailed it. In the entire world of the United States, the Europe, Asia traders, all of them, nobody made a prediction better than that. Across the world that I know of. We built that case off the commitment of traders, built that case off of monthly maps, built that case off a lot of things. Show you guys how to do it now. And as the market started to rally, bears still tried to short it the whole way up. Bears and bears and bears and bears. And now everybody's starting to think bullish. Everybody said, well, when's it going to turn around and come down? Well, barely escaped the recession. I talked about it last time on the Trading Camp podcast. All economic data looks hella good. hella good. All the stuff that goes into recession starting to improve. GDP is still, growth rate still positive quarter over quarter. Unemployment is coming down. JOLTS are going up. Those are the best data signs that you can get for economic improvement. The tech bubble pulled us out of this recession, and that's amazing to see. And so SPY to 500, maybe even 600 before it even comes down. Remember last tech bubble, the S&P went from 500 to 1500 during the age of the internet, from 96 to 2000. The tech bubble stupidity of I don't want to miss out on a once in a lifetime opportunity is enough to take this thing to 1,000 plus over the next 2 or 3 years. Don't sleep on that understanding. Don't think that because we've been in a recession for a little bit, it's bad. As a matter of fact, we've been kind of recessionary since 2020. 3 years is a very long time to deal with recessionary effects. About time we move out of it. And that's it. So we're walking close to a bull market that's not going to be. We'll show monthly maps don't lie, and the DD number doesn't lie. DD number has been positive every day this year. It's open positive and bullish every day this year. It's turned bearish only 2 days this year. DD number is your best tool, especially if you've never used Rocket Scooter before. DD number does not lie. It will show you everything you need to know about the bullishness of the entire S&P 500. Let's see where you guys are from, guys and girls. Ottawa, North Carolina. I'm going to North Carolina in a week. I'm going to Raleigh, Legion. Going to the beach. Spent a week at the beach house. Poland. Wow, Miami. Yeah, from all over. I love Miami. It's one of my favorite cities. New Orleans is one of my favorite cities. Go eat at. Never been to Fresno. San Antonio. I love San Antonio. I'm always there. Austin. I'm always there. Be driving to Dallas today. Morning fams. What's up? What's up? What's up? We got 6 minutes till we open up. Let's talk about get the news going. Jim Seth from Tennessee. Nice. Drinking through Firehouse today. New subscribed. Welcome, new subscribers. Make sure everybody go to the link below and grab the Rocket Scooter platform. You guys can play the extended trial. $35 a month, and you can actually upgrade to Pro Plus from there and get features when it comes out. Like I said, we're targeting with our first batch of people up until that moment to be able to get the platform for under $100 a month. If you subscribe, you can lock that in forever. Now, again, it's a $200 a month sub. Includes all the platform tools, data feeds, access to futures brokers, etc. And then we're gonna have stock trading come about a month after that. Just keep in mind, we're right there on the edge. That release. Make sure you're in Pro Plus. Once that launches, that under $100 deal goes away, and then you're back at the $200 a month sub. It's our big promotion deal. Get into Pro Plus while you can just lock it in. You can cancel anytime. Trust me. I'm gonna be the first person subscribed to a gym when they first launch. I'll tell you, Nicole and I go to this place called Solid Core. I never used to do Pilates. I thought it was just mostly, ladies exercise. Dudes didn't really do Pilates. Dudes need to do Pilates. Let me tell you something. Shit fucks me up. And I used to like Solid Core is like Pilates on crack. And so we go there. She get this founder's rate. Her monthly subscription is like half of what mine is. She joined when they open the gym. I'm always mad that I didn't sign up when they opened. That was more of a, weights and CrossFit-y type exercises, but reformer resistance is hella crazy. You do full body weights with that kind of stuff, but it's resistance training is basically what it is. So it's like bands and all that stuff. You got springs pulling you back. It's pretty dope. I'll rotate that into my workouts these days. Good morning. What up? Guadalajara. Ooh. Thanks for the smoke. Oh yeah, I heard it's a little smoky up there. Is everything okay in Canada? The fires and stuff. That Reddit post? Yeah, let me find that Reddit post really quick. Yeah, let me find it. When I call the bottom, yeah. I made sure to catalog it so we always could reference it. Y'all want to read my Reddit post? Let's go. I don't make that many of them. The case for the 2022 bond. And most of these places, like, didn't, like, a lot of these perma bears, like, banned the post or canceled the post. I had to call my friends over in stock market. I think this is the link. Like Wall Street Bets removed it. Investing removed it. They're like, these don't qualify here. I'm like, shut the fuck up, Perma Bears. Really? Here it is. So I used to be a moderator at our stock market. So I called my buddies that were moderators there and was like, hey, what's up? Like, hey, how's it been, man? What you been up to? I was like, nothing. I was like, hey, I'm just putting this post for history so that way everyone can quote me 50 years from now and say I was right. Like, oh, that sounds cool. What is that? I'm like, oh, I was just post call on the bottom. They're like, ooh, bold move. Okay. Yeah, post it up. Let's go. Yes, the case for the bottom is pretty obvious. I built, if you listen to the Training Camp podcast last night, I talk about all the pieces of it. All right, news this morning. We got 2 minutes to market opens. First of all, we're already opening irrational, so all lights are red anyways. So this is just because of futures. Remember, anytime you open outside of DD bands, futures get irrational here. Make sure y'all join up and check out the rules inside of the Discord. These are the things that I use when I trade. Irrational, anytime you open outside of the DD bands, the market's already irrational. It's already a trade small day, no matter what. Okay. So VIX is below triple B, which is great. We're going to still be bullish for the month. Looks like we have some room to move and Russell, but everything else is looking pretty stable. Nothing big on the news front. Going there. Looking at the any of the data coming out today, core PCE day today. Michigan numbers come out. Michigan numbers tend to stimulate the market a little bit. It's been more 3-star than ever instead of 2-star. It's kind of been moving the market. So in 30 minutes, going to have a minor catalyst. Just be careful. Markets are random and irrational from here as we are outside of DD bands. So the market's already moved its risk interval for the day. So keep in mind, it's really small. We're very close to the yellow line. That's correct. We have a 44.79 target. You nailed it. Anytime you're outside of DD bands, yellow lines are the next targets you look for. So if you do support the DD band and you move up, you're going to go ahead and look for this to be an upper area target to trade with. Now let's go right to Rocket's going to get the liquidity maps. If you need access to this, let me know. I want to make sure that you have everything you need. Get told. So we're going to have a quickie little... Oh. I hate when I do that. Oh, well. Whatever. Let's go full screen. All right. Okay, we got the opening liquidity map about to come through. All right, bull long up, perfect. Okay, we know the bull long up. And once you get the liquidity maps come through, grab your guide. Bull long up shows open, blue, open. There's always a V-shape area here. Open, blue, open. That's a nice little V. Any break of hedge pressure, let it come down. It's going to fall. So let's see what DD comes out at. So remember, type 2 resilience means if resilience is greater than 0, put out the infographic today. Opening outside the band, this is a gap and go. So the open price is now support. That resilience is great enough, 82 enough that it's likely going to support here and keep going to yellow line. It's a 44.80 today on the S&P. So it's about a 10-point move to the upside. So if I were to take it a day trade, I would long again. I would trade up to the yellow line. I would trade really small, a couple micros on the S&P if I was doing anything at all. So yeah, that's it. Very clear cut, breaking 440. The market's coming down. Take a look if there's any rotation. Russell is actually rotating to the downside today, so be very careful. BLU, same exact setup on the QQQs. IWM setup. Yeah, trade small Friday anyways. Exactly. BSUs are a little more rare of the bull side plays, but BSU is right here. So BSU is a little more complex. If you look at it, you have bull side open, short side hedging, and upward pressure from the difference in gamma between weekly and monthly. So it typically has to do with like the theta and the difference between those shorter term and long term options. So if you look at this, that upward pressure from that general, yellow to blue is a push, right? Yellow is probably like way down here somewhere. Yeah. So monthly hedge fish are not even close, right? We're way in bull territory. We're way trapped up in here. So let's go ahead and see what is actually actionable here. On the BSU, you take note. This little white line means the middle of the specified range. So from blue to bottom of bull zone in the middle. Blue to bottom of the bull zone in the middle. There's a dip. So if you're looking at areas to take trades on it, throw some tickers up in the chat. I love doing this. Throw some tickers. I'll analyze them for y'all as well. So if you open in between blue and yellow, check. I know we actually open above. Sorry. We open BLU and we broke to BSU. Okay. So when you change from one to the other, you understand that open, blue, open, blue, open is a V. If that fails, it turns to BSU. Then you go here and see what else is possible. So you have support here to the middle. 188 to 186 to the middle is 187. So if you break, there is a move like that to the middle. So you can either, if you're supporting here, it goes, or from there to the middle as a scalp, and then I X out. So both are pretty decent. This has about a 20-point run. It's upper DD band, so this is a pretty decent move to go. So all signs are decent, other than the DD band break. So right now, all things are pointing up. Everyone smash the like button while you're here really quick. The best damn day trading show on the planet. Best trading platform on the planet. You guys liked the presentation yesterday. Future stuff and what we're doing, what we're building in the future. The AI stuff, right? Rocket AI is just not a fun name. This is going to be the world's first AI-based trading platform. Bigger goals of Rocket Scooter, things we're going to build that we don't tell anybody. Finally starting to leak out a little bit of information what we've been building. That stuff is going to completely change the game for traders. I'm talking not just indications. I'm talking like the AI portion. All these little things that haven't even been discussed. They've been teased for years, right? But now we're kind of leaking a little bit in both. All right. DD's at 97. Is that accurate? It's absolutely accurate. Why would that not be accurate? It's every stock is on almost on the bull zone. Let's check it out. Let's go ahead and pull a search for liquidity map. Let's go here and look at all the ones that are bullish. BBBB, BBBB. And let's go ahead and remove hedge break. $167. Let's take a look at all the ones that are. I mean, it's just how bullish this market is. And I'm saying is that everybody now is going to be like, look at this. Everyone's a bull now. But here's the thing: I was the first bull, right? All that matters in this game is that you're first. And look at this. There's not that many. There's not that many bear side stocks in the scanner. It's very, very little at all. It's crazy. BLUs, baby. BLUs, baby. The AI portion of the platform. And let me tell you, Ash and I have been working on some really big things lately. And when all is said and done, at the end of the day, Rocket Scooter is about to accelerate. It's a whole new dimension with this development process. I think we're going to build. It's going to be the next thing. All these little 20-year-old trading platforms that haven't changed a lick are about to be taken out to the woodshed, as we say in Texas. Hit that like button, you guys. All right, let's go. You ever seen that high before? This is the bullishness that we've been screaming about. And, you know, like I said, Squeaky wheel always gets the grease, and I'm not the loudest person on social media. We're huge. Our community is huge. We're probably one of the largest, if not the largest, Discord / membership communities. It makes it in the future as well. I don't know about everyone else, but we're massive there, and so but quiet. Like nobody. You know what I'm saying? Like we're not loud to bring a lot of attention to us ourselves. We've grown organically and quietly, right? But we've had the most banger predictions. So the neat thing about that is that we're kind of only attracting smarter folks. Y'all are like the smartest people. Y'all aren't the dummies that like to watch paper traders swing for the fence and YOLO calls on Lotto Fridays, like the people that actually want to learn how markets work and hungry to be the next level and hungry to be first. It's like if you just put in a little bit extra effort and do a little extra homework, you'd be 100 times better than everybody you're in a room with when it comes to trading and investing. Here we go. Got some data coming out in 5 minutes. Chicago PMI. Just be careful that doesn't jolt the market. Around. Comes out in the 45s. When we'll be able to get futures data. So here's futures data. You must be Pro Plus, which means you're either in a yearly or lifetime subscription, number one. Number two is if you're in the extended trial, you need to upgrade to Pro Plus, and you got about 2 weeks to do that. If the upgrade will either be a pop-up in your browser, right up here in the platform itself. If you do not have that, send me a message, and I will give you the link so you can do it today. If you do not do that when futures launches, you will not be able to get into futures without having to pay the full price. The big launch deal is going away. So everyone here, trading platform, being a $200 a month sub, the $35 extended trial upgrades to something less than 100 if you take that path. That was all just founders rate. Everybody must be Pro Plus. The platforms will be different from that point forward. Pro Plus and Pro will have different versions of the platform. Pro will be limited to this forever. Pro Plus will get all of these extra features for the years going by. So we're essentially stopping development on Pro for now. So the extended trial will basically get this. All the extra alerts, the DD bands, and all the yellow line, red line, risk interval, all that automation is going to be Pro Plus. Just keep that in mind. So everybody has to upgrade to get that new version of the platform. Then we're going to walk you guys through how to get your brokers, how to get a broker set up, introduce you to the brokers, maybe have them come over and give a little demonstration webinar. Market's looking great. Let's pull some stocks. Some cool banger plays today. BLU, Tesla looking good. Everything's looking great. Hedge pressure support across the board. I do want to let's find some illiquidity pocket runs as well. Both side. So I'm going to go to the scanner, type in illiquidity pocket. I'm going to go here to liquidity map. I'm going to look at just the bullish ones. Find ones that are right on hedge pressure. Looking to run. So I find my runners today. Micron looking very decent. So that move was missed, but illiquidity pockets, when you run through on a bull long up, right? And then you hit that zone like this, it moves pretty quick through it. I'm gonna find some that haven't played out yet. Marathon. Oh yeah. Marathon. Super sexy here. Monthly hedge to hedge. Keep in mind on the S&P, markets tend to exhaust themselves when you get to these yellow lines. So that's today's upper target. But we're still creeping higher. And I told this in the podcast yesterday, is that anytime the Russell starts moving, right? This is what I'm saying. People are trying to short this or feel like the rally is exhausting itself. When you start to see, there's two signs. Number one, the Russell has sold off and is hanging tight, right? Everything else that we have is essentially rallying back to highs. Nasdaq is almost back to the top. You see that? So people have longed into tech, or shorts have been squeezed into tech. The S&P is about halfway up on its ride, right? And Russell's barely moved. Okay, so now people that have started rolling money into NASDAQ and tech, rolling money into S&P stocks, and they're now rolling money into the Russell stocks. When you start to see the Russell finally starting to rally, as people are rotating out of the big dogs, with the DD that's positive, the rally's just starting. Just starting. This is the beginning of the move. This isn't the end of the move. This isn't the peak of the move. The start of the move. People are just rotating out. When you see SPY and QQQ go up and Russell come down, or Russell come up and those go up, when one breaks down and one breaks up, that just means the index divergence rule as well. Those two things mean that people are just healthily rotating from one sector to the next, or one maybe taking some profits on the big stuff and then diversifying a lot. When people diversify, the perception of risk is that it's safe. Once you've diversified into riskier things, you diversify into riskier things, the perception of the first things you bought was safe. That's what I meant to say. So essentially, as people have bought all the blue chips and now that's kind of rallying, selling a little bit, rotating into Russell, the entire stock market doesn't fall because of that. The market is so bullish, it's not even funny. And you have to remember, you have to tell all your friends we're the first person that said it. Did y'all check out that Reddit post? You want to read it real quick? Let's go for it. I'm going to show you something. Here we go. Case for the bottom. When did I make that post? A long time ago. Eight months ago, so October. Not a bull recovery thesis. The market is still bearish for a few years. Again, that's before the fundamentals change. Now I've erased that. That doesn't count anymore. Market bottom in October, likely going to rally through December, experience a year-end sell-off for a week, and then rally through the new year at their quarter one earnings. Did exactly that. FOMC to taper rate hike increases. The last press conference confirmed this to 50 basis points, maybe 25, maybe 0. This is before they tapered the rate hikes. I predicted that as well. The FOMC will gauge market health by summer to match with QT effects, and if the market is healthy, they will increase rates rapidly. 100 to 200 basis points, a second wave to nuke inflation. That's coming maybe now. I think that's probably not going to come until late in the year or early next year. They're still going to raise rates. Don't forget about that. But the market's not going to care. The market survives this quarter 3 2023 and later. We're in the best bull market we've ever seen. The labor market tanks at any point between now and the FOMC will cut rates. It's the only thing Powell talks about is the labor market. If there's a market crash, it's destined for spring, summer 2023 to find lower lows. If there's a crash, that's it. It's the only time. Markets must be illiquid and market makers must themselves as a whole be net short. The two safety nets I always talk about. All right. So we drew this. Remember, right here, this was the candle. That's what we drew. 460 S&P. Quarter 2 2023, 460. How'd I do? How did I do? How did Rocket Scooter? It's not like I'm brilliant or anything. It's Rocket Scooter. It gives me all those fucking answers. Literally. Gives me that information. Just place it in my hands. I don't have to think too hard about it. It's up there. I posted up in chat. Of course, I know a little bit more about the market than just Rocket Scooter stuff, but obviously it was very accurate. This is it. Go here. Everyone go here. Save it. Tell all your friends. Look. I mean, how did I do? Why is this not? Why is auto scaling? Oh, here we go. Where's that, October? Literally like right here. And I drew a line straight to 460. We're getting there. Not bad, right? Okay, let's read some more stuff. This is really cool. Crazy talk. I made a prediction in July that we'd have a 2-month relief rally through August, and that was 100% there. It's happening again. All the pieces are lining up. I long both bear market rallies at this timing. Rally, it's not a fundamental thing. It's a trading thing. It has to do with the mechanics of the market. That's what pulled us out. Fundamentalists are arguing bear sentiment, which is not being disputed at this point, but also they understand trading. There's so many economic changes that come with QT inflation. Blah, 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 blah. While the Wall Street is looking for the Fed to cut rates and proceed with QE, which has been the single point that ended most all bear markets in history. Well, both of those, especially QE, are nowhere in the horizon whatsoever. It comes down to next best thing. The attempt to not raise rates aggressively will be the mechanism to pull shorts out of their trade and cover for profits for the 2022 tax year. Markets are looking quite bad. We're going to talk about these things. Some data really quick for you. There's your short's going to pull profits for the 2022 tax year. There's that right there. You'll see that. God, I'm so fucking smart. There's that in December. Okay, let's keep going. Shorts pull out the shorts. That's a short squeeze there. Market's looking so bad, but it's going to take another redistribution wave. Market makers induce buying before there's a mechanism to let the market find lower lows. New buying. Here we go. This is in October. 1 wave, 2 waves, 3 waves, 4 waves of new buying. Hasn't even stopped. They need to redistribute their position. Okay, this is a talk about the commitment of traders, liquid markets, when blue and green, when asset managers and leverage funds pinch together. When you see these two things pinch together, markets are liquid. When you see these two things pull apart, markets are liquid. Asset managers and hedge funds, long and shorting to each other, and more traders in the pot. It means the markets are liquid, and liquid markets don't crash. It's safety net tenet number 1. Number 2 is when the dealer position is positive. The markets have never crashed once. It's number 2. Brilliant announced. I talked about how we had the COVID short squeeze, which built up here as people were betting on COVID round 2. Asset managers were buying into this rally, and as soon as QT was announced, people started selling. As you see, this green line was starting to taper off. This started the recession, but we still rallied for 6 more months because the COVID short got squeezed once the vaccine came out. So shorts covering into long selling made the market still stay liquid, and we didn't crash that hard. Brilliant timing to announce QT during a period of liquidity. J. Powell, you are brilliant. Okay. He waited until the market could handle it. Imagine announcing QT without there being a huge batch of buyers after this, right? So the market was very liquid, and it's like, hey, time to start raising rates and having QT. And all the asset managers were selling all their stuff, but there was enough buying to keep it from crashing out. Another thing, this is safety net number 2. Dealers in a net long position. This red line above 0, never once in history has the market crashed while the dealers are holding the bag. In this particular instance, the market double topped, dealers went negative, and both safety nets were gone as you had sellers and shorts together. You need the red line to go below 0, and you need the blue and green line to both point down, and that's the mechanism for markets to fall. Command of trader is very easy. So you need red line below 0. Safety net 1 is gone. Oh no. Okay. So when I called the bottom in October, here's where it was, right? The dealers went positive. The dealers were positive here. And you had a wave of buying and a wave of shorting. So when they fan out, it's liquid, and dealers are positive. Liquid markets do not crash. Dealers hold the bag. The markets do not crash. 2 safety nets. Perfect. This moment in time, the 17th, is when I called the bottom right here. All the pieces were in play to keep the market from falling. I'm the most brilliant person you've seen doing this. Yeah. Appreciate it. But I want you guys to be the most brilliant person you've ever seen doing this. That's why I want to teach y'all how to do this. I want you guys to go out there and shock and awe everybody. Here we go. Yellow line's hit. The day is over. Look at that. Executor yellow line, 44.80. The call out target from this morning is done. Market pretty much over. I'd close everything. I'm about to get out of here in about 15-20 minutes, hit the road. But that's the day. If I were doing anything, I would be holding a little bit of a runner. But basically done. Okay. So right now, you have safety net 1 gone. You have dealers positive. I'm sorry, dealers are no longer positive. So the safety net is gone, but that doesn't mean markets crash. Dealers short into waves of buying, which floats the market up. And that's basically what you're going to see. So right now, the asset managers are becoming more long. the shorts are now getting squeezed. This is the short squeeze that Ash and I predicted like 3 months ago. We said a short squeeze is coming, and everybody thought the market was going to wave down, and we said a parabolic move to the upside. Ash and I have both been saying that for months. Y'all all know that. We've been saying that actually since probably when two companies merged. So the short squeeze is imminent. You can see that liquidity right there with the dealers positive. There's no crash. The short squeeze are going to get burned, and monthly maps and Rocket Scooter shows there's a short squeeze. So easy to read that. And I'll show you how. If you'll stay for 5 minutes, I'll show you how to do it. So here's rule number 2. Once the dealers are negative, liquid markets don't crash. So when these are pointing together, fanning out, they don't crash. This is illiquid now, but however, it's illiquid to the upside. So the only time when the dealers are negative, will the markets collapse on themselves mechanically, is when it's illiquid to the downside. When green is selling and blue is selling at the same time. Case in point, I'll just draw on the screen. Let's find out, okay? Green and blue are pinching together, and exactly here, everybody see that? Exactly here, you see blue is pointing down and green is pointing down, and dealers are negative. If I were to scroll my little thing up right here, isn't that cool? Exactly here. It's like, I hate to say it's not rocket science. It's easy as fuck to do this. Do you see that? That's when the market pulls back. I literally just drew it. When the market's illiquid to the upside, when everybody's buying, so shorts are covering and longs are covering, what happens in the period from here to here? Look at that parabolic move. You see how it accelerates? That's parabolic, baby. Dealers are negative, blue up, green up, everyone's buying. Parabolic. We're about to hit parabolic. We're gonna hit we're gonna rush to 5,000 S&P without even stopping. First, I'm going to the Millennium concert tomorrow in Dallas. So I'm about to party hardy. I'm gonna spend a week. We got a bougie little hotel. I'm gonna spend about a week just chilling. A couple days in a hotel, a couple days with family. Coming back for a day, and then we're gonna go spend a week at the beach house in Raleigh. Do some surfing. All my family's meeting up there. Just chill.
We switched and wow.
Then I come back and then
I know it's proven natural nutrition is helping support Charlie's strong.
Then we're going to Denver. Then we come back. Then Nicole's going to Alaska for like a week. Then we come back. Then we're gonna go to Chicago for. I'm deciding if I want to go to Chicago for 2 weeks or not. Trey's and Matt's having an event. I always love going to Matt's event. So he's having an event in Chicago. A week before Lollapalooza. That's why we're really going to Chicago. So I might go there a week early just to hang out with Maddie. If you guys know Trey's and Matt, the streamer, he's a kick-ass dude. So we might head up there to see Matt a week early. Maybe not. Depends. I might be exhausted from all the traveling. We're going to go to Lollapalooza and party. And then I'm flying straight from Chicago to Canada, Toronto, for a wedding. I'm gonna spend a week in Toronto. Then I'm coming back, and then 2 weeks later we're going to Costa Rica. It's a lot of traveling. Hoi. Okay, back to the story. Do you guys see how right here was the inflection point of the market? That's the important takeaway of this right here. When everybody's selling and the markets are illiquid to the downside, that's what causes. That's what causes those things to pull back. Right about here, you can see, right? And then once it starts fanning out, right, you start to find buyers and people shorting at the same time. You can see that creates waves of stability. When they fan out, pinch in, it's no longer illiquid, right? Buyers and sellers, sellers and buyers, buyers and sellers. That stabilizes and bottoms out the market. So that's basically where I'm talking about here. So, FOMC activity can't control cost push inflation. Inflation can only heal itself in that mode, is that the supply and demand just heals once people go back to work and labor market repairs itself, yada, yada, yada. Listen to Powell's carefully scripted comments. They're all about labor market, and he's right. Inflation traditionally caused by hyper-economic activity, where lending and spending is maximized, forming bubbles, and prices go up, which require Fed intervention. Cost push inflation, however, the kind that we experienced, is when price of raw materials, labor, intermediate processes, and production go up due to shortages. And the world we experienced that because of COVID. I'm sure it just spiked all the prices of stuff. That went up. And that type of inflation Fed cannot control directly with their typical handles. Type of inflation is only cured by the natural competition brought about by surplus of all things, labor, raw materials, and produced goods. Once people debottlenecked the logistical chain, inflation came down. And at that point, inflation was coming down very rapidly. CPI has been coming down month over month. Competition and surplus bring prices down. Therefore, preservation of the labor market is the best mechanism to control inflation. That's all Powell ever says anymore is labor market. That's the last negative thing. And that's what I also talked about last night in the Trading Camp podcast. If you go back to here, let's see what Powell says. Can I search by the word Powell? When he was speaking, was it yesterday or a couple days ago? I remember I'm going to find data. He's basically saying just like, won't weed out here. What are you saying, pal? Yeah, I'm tired of scrolling. Yeah, I mean, the market couldn't be any more liquid. I mean, this is the best bull market we will ever see in our lifetime. It's going to be so strong. And people don't understand. Here, Powell, let's see. Where's Powell talking? Powell talking about PCE. Propagating inflation 2% is a long way to go. I agree. That's what I even say here. You're not going to have an easy way to get inflation down. Inflation just has to heal itself slowly over time. There's very little they can do. They know that. They see 2 more rate hikes by year end. The extent of bank turmoil, blah, 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 bank failures. The banking system strengths have eased, which is good. I thought they said something about... Overall, the U.S. banking sector is strong and resilient. That's good because the XLF has barely moved. I thought he said other things. Anyways. Oh, here's more. The moderate pace of interest rate decisions to continue. I think the market's stable enough to handle it. They're going to keep raising rates because that's what they need to do. And I think they're going to start again next year. We shouldn't assume a return to low inflation environment. I agree. That's going to, again, there's no quick return there. The market just has to slowly bring prices down due to competition. That takes a while. There's all that throughput bottleneck. You industrial engineers here would know that. You can't just, hey, everyone lower prices. Everyone has built in high prices into their model. You've made something that's expensive. You sold it wholesale. They bought it expensive. They need to make a profit. They sold it to Walmart. They bought it expensive. They need to make a profit. And we have to clear out those shelves and keep pushing inventory through until each pallet that was bought at a cheaper price is finally sold with the same margin so people can still make profit. Imagine like I made something for double the price. Someone bought it. Walmart bought it for double the price from them. And then they're selling it for a high price. And then since then, I've made like 8-10 more pallets, and that wholesaler has been buying them all at the lower and lower price and just storing them. But Walmart doesn't sell at the inflation part where you see the price until we clear out all those goods at the higher price, and they push out the pallet with the lower price and then push out the pallet at the lower price. There's a delay between when I make something for cheap and when you get to buy it for cheap. You understand? That's logistics. And so industrial engineers here will be like, oh, I love those problems. So there's an accumulation, right? N minus out equals accumulation. There's accumulation of slightly cheaper and cheaper things as the cost of production is going down. But it's not seeing the shelves just yet. It's the rate at which we're buying stuff. And that's directly proportional to the rate at which we stay employed and the rate at which we get credit. As long as banks relax the credit standards, they're not being super stingy about that, then people can continue to spend more than they make and clear that stuff out faster. If people get their jobs back, then more people are making stuff and buying stuff, and that clears out faster too. So essentially, the more people go back to work, the more people get credit cards. Will be the cure to inflation. That's it. That's the cure to inflation. And that's why Powell says it's a slow, dirty process. And they know they can't do anything about that. Nothing can raise the interest rate. All it's going to do is make banks stingier with credit and slow things down. They can't raise rates too fast, and that's why they haven't done it yet, which they have to make sure when the labor market's healed, then essentially the risk of you not paying your debt is very low. And banks are more willing to give you credit because you're not going to lose your job. And at that point, the banks will, Fed will raise rates aggressively because they don't care. It's not going to dry up the credit market because that's going to be very stable because of a healthy, stable labor market. And that's why I always says labor market, because as long as you have your job, banks are going to give you a credit card. As long as banks are willing to give you a credit card because of that thing, it doesn't matter if the interest rate's higher and they get better rates. You outpace the risk of the lower risk situation than depositing in the Fed with a higher interest rate. So obviously they just want to make sure that they can not dissimulate the credit market, and then all of a sudden your spending will drive prices lower. And that's how you cure that stuff. They know that. And then Powell says this. I mean, you read between the lines, he says exactly the same thing. So let's talk about it. Same mechanics in the 80s, blah, blah, blah. I talked about this the other day. Rate hikes didn't bring a bull market down. Inflation, yada, yada, yada. We talked about the 80s recession. Rate hikes do not equal recession. The market raised rates all through here, and the market still rallied, didn't care. That's that 82 to 84. That's that 82 to 84 was like right there. Yada, yada. A couple more things. Jay Powell's going to crash the market. In summary, QT announcement. So this is the summary. Created selling in 2021, but COVID shorts covered and liquid market didn't crash. When rate hikes came about, everyone was selling and shorting. Dealers amassed a net long. Liquid markets didn't crash, and now it's liquid and dealers hold it back. They won't crash on themselves until they're short again. This finally happened last week. Now we're short again. Each wave of an increased unemployment filings triggers a short squeeze. There are buyers here now to keep the market liquid. The old bad news is good news kind of thing. Back to that. Let's review that. Let's talk about the unemployment filings every Thursday. Continuing jobless claims. GDP, let's talk about that. Initials, okay. Right. Every wave of unemployment, 1, 2, 3, 4, triggers a short squeeze. Short squeeze, short squeeze, short squeeze. There are buyers there to keep the market liquid. This is just what we've seen. When people get laid off, the bottom line of companies gets slightly better immediately. If you lose efficient workers, then the company may experience problems by like a quarter out. If you lose inefficient workers, there's no effect. You've saved money, and that efficiency is bullish in the short term. So waves of layoffs are triggering short squeezes because the earnings are going to be good. This was talking about how earnings was going to look good, because they're laying off the fat. You're trimming all those, Zoom call workers, and so like companies looked better in their bottom line. And last earnings season was stellar because people just trimmed the fat and saved all this money, not having to pay those inflated salaries, right? Last couple things, earnings are a mixed bag this season. That was in October. So that catalyst to sell is not as strong this quarter. Inflation temporarily down. J. Powell considering tapering rate hike increases in December. They did. Shorts are locking in 2022 profits for the year, which can rally us through the new year. Check. Check. Rally us into the new year. Market didn't find lower lows until the market makers are negative again, in which this thesis is invalidated. I also didn't put in the illiquidity portion as well. But at least at this point, this thesis is not fully invalidated. We need the sellers to come in now. And the first waves in October, I longed all these things. This wave up, I'm in the worst things I can find. Google, Apple, QQQ, and starting money. I'll be shopping for a few other things. I'm out of my trades when market makers are net negative, right? Imagine this. Like way back here. I made thousands of % on those calls. It was nuts. So y'all remember back then. I was tweeting them all day long. I was having 6-figure days. as those things ran up to the thousands of percents. Anyways, fun post. Now the thesis is completely fundamental based. Now the market has been stable enough where layoffs are not outpacing job growth. We're creating jobs with the JOLTS going up. Unemployment, continuous unemployment claims are coming down, which is the big factor that you want to understand. The recession is over. As long as GDP growth quarter over quarter, the rate is greater than 0, then GDP is growing. This is comparing one quarter to the next. So over last quarter, we're growing 2%. As long as the growth rate is positive, it means GDP is going up. GDP doesn't go up in a recession. You don't make more stuff. You don't do more stuff. Initial jobless claims are way down this last report. So people, as of yesterday, fewer people are getting laid off on the first round. The jobless claim is you go file for unemployment. You don't file for unemployment. That's not like the wave of people that just aren't working and sitting back. It's not unemployed people. The jobless claims is different. You had to have been working. You had to qualify for unemployment insurance. You had to file for unemployment insurance. So it's not just unemployed people. This is unemployed people in the workforce who would like to be working. That's a great metric of the desire of people with a demand for a job, not the people with the demand for like no job. So eliminating that, that's why I love the jobless claims better than the unemployment number. We have welfare systems and other things to take care of that subset of the data. This subset of the data, jobless claims, you had a job, you got laid off, and now you file for unemployment insurance or file for unemployment insurance for the first time in the past week, which typically means you just got laid off and you got fired, which qualifies you for unemployment. So these are people that were working that got fired that probably need to pay their bills from their avenue for income is their job. Their avenue for income isn't like a welfare or some other type of pension or some kind of something else or investment income. These are people that were working, that got laid off, that filed for unemployment because they got laid off. So these are your wage workers. It's a complete like zoom in on that. Get laid off, go back, waves of layoffs. People got laid off and then that slowed down. People got laid off, slowed down. And the continual jobless claims are the people that are in that boat that still qualify for benefits under unemployment insurance. Means you are still able to get that, which means it's beyond the first week and you can still continue to claim unemployment. So when you do unemployment, if you've ever done it before, you have to go out every week and fill out the survey. Yes, I'm still looking for work. Yes, I'm doing this. Yes, I'm doing that. And you get your check. I remember because when I was 28 years old, I got laid off from a Fortune 50 company. And I definitely had to go through that every single week to get my, I don't know, whatever it was, $1,600 check a month. Every week, you'd have to go fill out that survey. And so every week, they publish that data. These are people that still qualify. So after week 1, I was an initial, and week 2 and onward, I was still qualifying. So I think you file for like 3-month burps. So these are people who still are unemployed in that window. I don't know if you can file a second time. I don't remember. It was in 2010 when I was a kid. But if you remember, I know for a fact you're at least 3 months in. I have to research that a little bit more. But these are people that are still unemployed that didn't get their job back. That's it. And now that's starting to roll off as of April. So the big sink of people that are unemployed are starting to go back to work. That's a great sign. Going back to work. The JOLTS, I'm not going to go look that up, but the JOLTS ticked up, which means more available jobs are there that want to be filled in the 30-day window. JOLTS up. People unemployed for multiple weeks going back to work. GDP still positive, growth still positive, and new waves of unemployment slowing down. All signs are there that the recession is over. I put out a video, another Babe Ruth pointed the fence that the recession was over last week, 2 weeks ago. Not only are we going to SPY 500 or 600 before next spring, the recession is 100% over. It's it. Unless that data all turns around, GDP comes down, unemployment goes up, there's no recessionary mechanic. There's nothing triggering recession. Inflation's moderate. Interest rates are moderate. My credit limit got increased the other day, and banks are certainly willing to hand out credit. It's like just doesn't feel like a recession anymore. It's not just that we're rallying in a bear market. The bear market's over. Somebody says, DD's 96. Is that normal? Get out of your head that we're in a bear market. This is slapping you in the face with both fucking hands. The bear market's over. The recession is over. 96% of the market cap is pressing into bull territory. It's not an abnormal. You've never seen it that high because this is the strongest bull run we will ever see in our lives. It's in front of your face. Rocket Scooter is the answer in giving you those numbers. That's it. Do you understand that? It's the whole point. That triggered this whole conversation. You've never seen it this high. Well, you probably started trading in a recession. This is a testament to the recession being over. People can't be bullish fast enough, and Rocket Scooter monthly map will show you over the next 3 months. The bull side is getting stronger, the wave of volatility, and stronger all the way through September, October. This bull market doesn't even stop until October. The bears are getting squeezed, shown by the slope down of the bear position. The short squeeze Ashton and I started calling 3 months ago. Back in April, we said there's going to be a short squeeze of epic proportion. One of the biggest squeezes we've ever seen. People thought, maybe, I don't know. We said, no, Rocket Scooter shows a very sharp dip in bearish positions. Go back to my tweets back then. And so the short squeeze, we knew was coming. Well, watch this. In the commitment traders, look how soon we were. Back here, like I said, in April, we're saying short squeeze is coming, because the commitment traders doesn't show the squeeze. It doesn't predict the future, just reports what is. And as the short built and built and built and built, boom, here's the squeeze. Last week was the squeeze. It started. So the squeeze is now in effect, and we're sitting here waiting for it all day long. Now, again, Rocket Scooter is showing you ahead of time, and back here, it was showing the same thing. Pastor Matt's preaching. Recession's over. Like, honestly, do not see any. Again, I'll change the song I'm playing if that economic data turns around. But you need unemployment to go up and GDP to go down. Those are the two key factors of recession. Key factors of the start of a recession typically include tightening credit standards, or the end of a bull run, or end of a good period, right? The bubble starts popping, people start defaulting, people borrow beyond their means and then don't pay it off. And credit starts to dry up. It's harder to measure, but on a week-to-week and month-to-month basis, you get the employment data or unemployment filing data, and you get the jolts on a month-to-month, and you get the GDP coming out very periodically. You can check these things, just monitor. So those of you out there here to learn, watch GDP growth. If that goes to 0, then we're flattening out. If it goes below 0, then we're shrinking. If people start getting laid off again, or people that have been laid off continue to have a hard time finding jobs, the JOLTS number starts coming down, which means there's no new jobs being created or no new jobs available. All those are recessionary signs. Right now, everything is lined up to look beautiful. So what caused us? What caused everything to improve? Well, we laid everybody off. Imagine like in the late 90s, right? When the internet came out and all these internet companies spawned up, they really didn't produce anything. But then imagine in 2008 when everybody finally got out of MySpace and got into Facebook. The internet was the next big thing. 2010, we all had Amazon Prime accounts, right? So imagine missing out on that. The thing that changed the world, right? Imagine missing out on AI. AI is about to funnel technology into the next biggest trading platform in the world. AI is probably going to be everywhere you go. It's the next big thing. So those big waves of layoffs were all in the tech industry, and they're all going back to work because of this craze boom we have. It's a once in a lifetime opportunity that people don't want to miss out on. It's so stupidly bullish that people are so short-sighted. I've been trading long enough to know that the AI boom is going to take us to 1,000 SPY within 5 years. There is no stopping bull stupidity. I'm a stupid bull myself. There are people out there. If people put their money into invisible fucking currency and monkey pictures. You gotta believe they're gonna put their money into AI that's gonna be everywhere, from you starting your car to setting the temperature in your house, you opening a Coke can. The fucking Coke can is gonna thank you for opening it. Enjoy this beverage today, sir. Thank you, Mr. Coke can. That's gonna be literally your life. People are not gonna want to miss out on that whatsoever. And the idea is not that, okay, well, maybe it's gonna double top and we're gonna pull back. Where's the recessionary mechanic? GDP is just starting to pivot up as of this year. Literally everything in your life is going to be governed by AI, and everyone's rushing into it. The market does not ignore bull stupidity. You watch crypto go up to 60, 80,000, whatever it was. It literally is 100% or 99% useless. Yet people rally that to oblivion. There's literally zero, I hate to burst anyone's bubble, there's zero utility for crypto. There's nothing you can do with it but play a few online games and do a bunch of scams, and steal people's money without being tracked by the government. That's literally all it is, a cesspool of fraud, and nothing, it does absolutely nothing. Nobody cares about it but stupid investors that are early to the game. It's like if you invested in the internet in the 80s, you were a stupid investor. You're 25 years too early. Crypto, you're probably 25 years too early as well. There's no utility for it. It's a dumb investment. Now, if people are really willing to diversify into stupidity to bring it to that level, like I said, once your grandparents can buy a loaf of bread with Ethereum at Kroger, or you can pay your fucking taxes in Bitcoin, then I'm going to be an investor in Bitcoin. That's for damn sure. Till Uncle Sam accepts it as a form of currency, I ain't touching that shit. You're stupid if you do. No offense. Okay, like I said, until everyone's using it, literally. For my grandma passed away, she liking all my posts on Facebook. Well, that's the internet's the biggest companies in the world at that point. Yes, right? So when people are willing to invest in things with no utility and drive it to the moon, imagine people willing to buy things on the basis of AI. That's it. So this market's got nowhere to go but up on the basis of this tech boom is literally going to be the mechanism that pulls us out of the recession. And that's what I was saying earlier in the year as the market started to bottom. I was saying, I think this AI thing is going to be the next internet. I think it's going to be such a huge thing. It's going to rally so hard. The companies are going to have so much money. They're going to buy back their stock at the beginning, invest in efficiency, lay off all the fat. This boom's going to carry. And this AI thing's going to be the next internet when it comes to investor perspective. AI is a bubble already. Exactly. Remember when internet was a bubble in 2000? It was a bubble because you had everybody start a tech company, but there wasn't high-speed internet. It was like, the reason it was a bubble is because investors were piling into it just early. Here's the bubble, right? In 1998, you wanted to buy something online. So you wanted to buy an oven mitt, right? You're like, whatever, I'll just go online. Google, search for oven mitt. First, go to your computer, connect to AOL, dial up, tie up your phone line so no one can use it. You say, hey, Mom, I'm going to order something online. Okay, well, don't be too long, honey. I need the phone. Okay. Beep, 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 beep. You've got mail. All right, cool. Now I'm in the internet. Let's go. All right, now let's type oven mitt, enter. Okay. All right, waiting for the web page to load, web page to load, web page to load, web page to load. Oh, there it is. Okay. All right, now here's the thing. All right, let me go in here. All right, I have to pay for this thing. Ooh, $10 for shipping and handling. Ooh, 2 weeks to get here. Ugh. I gotta type in my credit card and my address and fill out this form. Oh my God, I'm just gonna fucking drive to Walmart. Fuck this shit. I'm just gonna go down the road and get it. And now, this day and age, it's like, I gotta drive to Walmart? That's like 2 minutes away. Fuck that. I'm just gonna order on the internet. I'll be here in like an hour from Amazon Prime. I gotta put pants on, put my shoes on, get my keys out and walk upstairs, get in my car and drive 3 blocks. No, what an inconvenience that is. Just one click buy. Oh, my credit card's already there. Save's gonna be, oh, the guy's ringing my doorbell right now. I literally just clicked send, right? That shift around is what made the internet awesome and popular. That bubble, I know people say it's a bubble. The bubble, the funny thing is that investors remember the last thing they missed. That's all that's if you're a money manager, all you ever remember is the last thing that you missed. That's it. Imagine you being the 20-year-old hotshot that thought in the 2000s internet was the bubble, and now it's everything. Now that you're 40, now that you're the boss of the place you work at, 45, 50, now you got this AI thing staring you in the face. Now you're saying the same speech I am. Listen, man, I missed out on that internet thing back in the day. Listen, I understand how people are. This is going to change the world. We're going to hold through. We're going to stay long. That's all money managers think. They only think about the last big thing they missed. And it has utility. That's the difference between that and crypto. Utility is there. So it's the next big thing. And it's enough to create jobs. And that's why we're going to be stimulating the economy with it. At least for now. I like the sound effects. Psychological trauma for them. Yeah, they're like, I don't want to miss out on this. There's no downside to it. I mean, it is the future with utility. It's actually the present. It's not even the future. It's an undervalued asset for this point in time. And people remember that as long as you have an industry simulating jobs and simulating growth, that's long-term change. You don't hire somebody to fire them a month later. As long as jobs are being created, you're going to keep somebody for at least 6 months to a year. I mean, companies don't hire people with the intent to fire them. So if you're hiring somebody, you're going to get productive labor out of them for the next year, if not longer. So GDP is going to go up as long as you're creating jobs. And there you go. And I like that. You like the sound effects. See, at the time, it was a bubble because the technology wasn't there to facilitate the dream of reality. That's why crypto was a bubble. The dream was just a dream. It has no utility. You can do anything with it. Like I always say, the joke is I went to the Bitcoin conference, just like that scene in The Big Short. I went there for two reasons. Number one, to party my ass off in Miami with all the other tech CEOs out there, which I did, which was very cool and fun. But the other reason was to actually scope out why crypto was so hot. And it was like in the scene in The Big Short where they go to the mortgage conference and they go talk to all the brokers just to see how dumb everyone was. Like, so I went to the Bitcoin conference and it was just literally like a conference of stupidity and hopeful people who were completely clueless to what was going on. And like I said, I walked outside to get a taco from a taco truck. I was looking for a place to put a USB in so you could buy your tacos in Bitcoin. They still wanted me to go get dollars. So to walk to an ATM machine in the conference hall for the Bitcoin conference to take some money out, dollars, so I can buy my food with dollars at the Bitcoin conference. You'd think at least the enthusiasts would have the ability that all caterers and whatever there would be crypto enthusiasts. Well, I can go buy everything with crypto. I can buy a damn thing there with crypto. So you knew it was fake and you knew it was fraud and you knew it was gonna fall apart. It's the most hilarious thing. Yeah, blockchain has utility. That's true. And as far as the utility it has, it's like, what is the utility? It's enough to be a worthwhile investment, but it's like when people say, well, crypto had utility and crypto crashed, but blockchain has utility, that's a bag holder justifying their bias on their devalued asset. If somebody bought crypto and it went like if you bought it at 5 and it went to 10 because you thought blockchain had utility, then you had a proper investment. If you bought it at 10 and it went to 16, you held it back to 20, you're like, well, maybe blockchain has investment. That's like me moving my stop as the market's rallying and I'm short. Well, you can't change your bias in the middle of your investment, right? I agree blockchain has utility and people should have said that 5 years ago and seen that anything beyond 30, 40, 50 was a bubble based on the non-utility part of it. So yeah, the utility portion of blockchain probably should have given, some of those assets a little bit of growth. Ethereum especially, right? It's a pretty good one, but the part without utility was the part people held through, and then now that it's upside down, they're just like, well, maybe there's just like holding AMC. Well, maybe they're improving this and improving that. It's like you can't shift your bias around. You're not really made a sound investment. You knew the portion that was valuable, you invested in that. And then once you got your gain, you got out. So if you held into the bubble, people bet beyond that. And I agree. Blockchain has a great utility, 100%. It certainly does. But the whole point is to compare it to the internet, right? The internet had utility. It just didn't have the technology. It has utility. It just didn't have the technology at that time to give it to make the dream a reality. And that's where we are now. AI is here. It's here to stay, and people don't want to miss out. Monthly maps are showing still short squeeze. When this light gray slips down, is a short squeeze of epic proportion through July. It's a parabolic move to the upside. Tell all your friends you heard it first. Literally, everyone here is finally starting to pair around and be bullish for a little bit. People are saying, well, recession's still there. Like, literally, as of this week, I said the recession's over. I was on a podcast last night because people wanted me to talk about my crazy prediction. But, like, I just remember, I have to say, on this particular day when I called the bottom, I was in a podcast with all these fundamental dudes. I think Stock Talk Weekly was hosting it. He's like, let's get a trader's perspective. Matt, what do you think? It's a bunch of really smart guys, so I'm not dogging them. Markets and Mayhem, Special Sits, all those guys. They were just talking about bear. And I was like, yeah, but I think the market's bottom. And they're like, what do you mean it's bottom? And I'm like, it's bottom. Yeah, fundamentals. But the fundamentals, I'm like, I know. Yeah, I agree with you guys. Y'all are smart. Y'all are smarter than me at this stuff. Yeah, market's bottom though. Mechanically. What do you mean? I was like, what do you mean? And people were like, don't you understand this? Don't you? And they started going very deep in the bear theory. And it was like stuff that went way over my head. I'm like, look, y'all are losing me. I'm just telling you, these are the mechanics. The Fed's going to stop raising rates. What do you mean? The interest rates they need to go up because the bond market's going to collapse and yields this and that. And it's just like, and the debt ceiling and all the, literally reaching as far as it can. I'm like, I don't know, man, the market's liquid and liquid markets don't crash. Ever. Like ever. That's it. Here's the graph. I'll chime in 6 months. Let you know if I was right or wrong. I agree. And I said the stock market is likely to support itself despite bear mechanics. Powell's going to stop raising rates and the market's going to comfortably sit and rally on this AI boom. Yeah, but we're in a recession. I'm like, I don't care. People don't want to miss out on this AI thing. Call me a visionary, whatever. I didn't. I made videos showing the thousands of % gain I made buying the bottom. I bought some really deep out of the money calls on JP Morgan, Apple, ultimately got Google, got QQQ. I mean, it was great. People are like, how many calls you buy? I bought between 500 and 1,000 calls of each one of those stocks. And when you get those once in a lifetime bets like that, you don't have to sit here and muscle out a living as a day trader. Build yourself a bankroll by being smarter than the next person. By being the one person in the room that sees something no one else sees. Make 10 years worth of gains in a single month. And then just ride it out. And I made all those tweets just so people will know. And I made all those posts on Reddit so people had the history there. I like to make sure that if I make a call, I don't like to appear later and be like, I told you so. I literally, when it's happening in the face of everybody saying that you're dumb and you don't know anything, I tweet it out there and post it out there, and I never delete it so that either I'm right or wrong. And I told the guys on trading, I told Alejandro and Noah yesterday or 2 days ago on the trading camp, they were like, he goes, Matt, every day I wake up, I'm happy because this bull market. He's like, I've been waiting forever for it. Rock Scooter shows me bull market every single day. That DD number is just so strong. The monthly map shows the short squeeze. Like, dude, I wake up so happy. And then I always go to your Twitter and see what you're saying. Then I smile even bigger because obviously your euphoria for the bull market just kind of supports my... I like every time you say it's more bullish, I get happier because I've been long in this market all year. And I go, well, if it doesn't hit 500, we're going to circle back in a year. We'll meet with Matt. Or he says, if the market hits 500 SPY, we're going to have an emergency podcast and bring Matt on. And I said, if we don't hit 500 within a year, I will come back on the podcast and wear a clown mask the entire time. Just to say I was wrong, just to be funny. But I'm not wrong. I'm being very... I just don't want to... I don't want people to unsubscribe to Rocket Scooter if I say 1,000 because people will think I'm just nuts at that point. 500, 600 is obtainable easily. I wouldn't be surprised if we pressed straight to 1,000 by a year from now. Literally the S&P double in value. You know why? There are sectors that haven't even moved yet. We've moved just on a few sectors alone. There are things that have barely started to move. Imagine if banking starts to move. Imagine if Russell starts to move. There are things that have barely even moved. If we've exited a recession, imagine what happens once we start forming a credit bubble. Imagine if the XLF just goes to double top. What's the mechanism for SPY to go from 440 to 600? The XLF double topping. Even if banks are bearish and we double topped and came down, what are the banks doing? Short squeezing. There's the mechanism. Shit that hasn't rallied yet to catch up. You guys like these streams? I love having these streams for y'all. I want to open your minds and think about this. All right, going forward, I got to get out of here. It's about to pack my bags and head on a road trip. Michael Berry was long on banks. Michael Berry is not wrong often. I aspire to have vision and patience to look at numbers like he does. The guy does more data mining than I do. Trust me, he loves reading into stuff. Like he will pile infinite amounts of data and just comb through it to look for evidence. Like that's the kind of that's well-deserved gains on those investments. And the amount of research that the guy does is just inspiring, right? I mean, if he's long on banks, I'm not going to say that that's a terrible idea. I think that the credit standards, or that the credit issuance is not going to be a problem. And I think credits, as long as people are getting their jobs back, banks are going to start issuing out credit cards. It's going to spin out the economy. I think that as long as the interest rate stays moderate, that we're going to stimulate the banking industry. I think that's going to be the thing that runs up. Let's see how. Let's double check one more thing. Energy is still stable. That's what I wanted to see. Volatility coming in there. All right, that's pretty normal. With the XL, let's look at comms real quick. Comms, right? Got a lot of room to go. Barely moving there. XLK, right? You can see the tech is kind of what's driving this boat. So look, we've had the market recover just on tech. If the market slowly starts to build jobs and all those other sectors, imagine what happens if banking, comms, utilities, all that stuff start to catch up. Right? Utilities still depressed. Russell's still depressed. Right? People are still cautious because they're not looking at the data. The real estate, I think, is RE, right? Look at that. This is not showing any signs of rally yet. This is still showing bull side weakening, bear side strengthening. So this is not destined to break out just yet. So there's no boom in real estate, but as we saw XLF, it's just primed for a short squeeze like everything else. You see this right here? The XLF is dying. Bank stocks are it for the next month. That's my call. Oh shit, my bad. Hold on. My bad. Sorry. My bad. Bank stocks. So I'm just looking at the XLF right here. Banks have, or the financial sector has barely moved. The Russell's barely moved. Utilities has barely moved. Real estate has barely moved. And so like, when you look at all the sectors and monthly maps, XLF is about to go through a short squeeze this month. Okay, so financials are going to move. Utilities, kind of a mixed bag. Illiquid and not breaking out. So utilities is still kind of damaged. The RE, definitely this is a bear setup. Bull side weakening, bear side strengthening. So this is not to break out just yet. Financials looking great. The things that haven't been tech. Energy, about to go through a short squeeze, and volatile. So energy is probably, the more immediate thing is probably energy. I think in the next couple of weeks, energy is going to become volatile with the short squeeze, which energy is parabolically going up. With that, Shortly to follow is banks. So if I were to build a portfolio right now, I would go into energy and I would go into financials. This is not investment advice, but the timing of the short squeeze. So energy is imminently about to become volatile. And when you're volatile, what I like to look for, right, is when bull side and bear side are fanning out like that, volatility is going up. Which way does it usually break? Well, I usually look for the one that slopes the most. That's really steep and that's really narrow. The bears are fleeing faster than the bulls are fleeing. So in a short squeeze, sometimes increased volatility happens when you have a parabolic move to the upside. Very rarely do you have volatility go up when the market goes up, but that does happen when you're in a short squeeze environment. So like I said, this is just priming for these parabolic moves. I mean, you can just see it like slapping you in the face. It's crazy. All right, everybody, we gotta get ready to get out of here. Love you guys. All right, so make sure that you check out the Rocket Security Incentive trial. Get these monthly maps, and you can play with them yourself for $35 a month. You can come on in, check it out. We're going to have futures releasing in about 2 weeks. When the futures comes out, you'll be able to connect to all futures brokers out there, trade futures, look at futures data, get all your automation, Rocket Security, your DD bands, all this stuff finally automated. Make sure you upgrade to Pro Plus. You have to be in Pro Plus. Huge deal going out that you don't have to pay full price. If you get in now, they'll come in less than half price. So make sure you message me in Discord or send us an email or just go to the website, sign up for the trial. Make sure your grandfather and we love you. Thanks for tuning in. Gotta get ready for my trip. Happy weekend. Happy 4th. We'll see y'all later.